Hello and welcome to The Trade. Before we get to the charts, let's get across those macro moves. The Federal Reserve holding interest rates steady, but in its most divided decision since 1992, three policy members saying it was no longer appropriate for the central bank to communicate a bias towards lowering borrowing costs.
Inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that three people dissented over the language. I think all of those people agreed with the rate decision.
And this was Jerome Powell's last press conference as Fed chair, but he will remain as a central bank governor because he says he's concerned about legal attacks on the Fed. Also overnight, the Bank of Canada keeping its policy rate unchanged at 2.25% as expected. And in the latest development in the Middle East, President Trump has said he will not lift a naval blockade of Iran's ports until he secures a deal with Tehran to address the country's nuclear program, extending a standoff over the Strait of Hormuz. US Treasury yields rose to a 1 month high following the Fed decision. The US 2-year rose to 3.84% and to 3.94%. The 10-year was at 4.43. Australian 3-year government bond yields rose to 4.78. The 10-year at 5.09. Markets pricing in a 75% chance the cash rate will be hiked by 25 basis points at next week's RBA meeting and a 100% chance by June. Well, let's get a look at the charts now. Off the back of some of those key central bank decisions, Nick Twidale joining us from ATFX. Nick, welcome back.
Thanks for having me.
So, big central bank week. This week, let's begin with the Fed then.
Huge.
And what you saw there, and obviously how that's played out, I should say, as far as the US dollar is concerned.
I think it's certainly more hawkish, and we saw an appreciation in the dollar, and as you showed there, Treasury yields massively had a big spike up to monthly highs. So I think it's dollar positive. It's a very interesting situation going into Kevin Warsh coming in to take over the chairmanship, because on one hand, you've got him really be appointed to have a dovish agenda. On the other hand, you've got the White House pushing what's really an inflationary moves by their actions in the Gulf. So he's coming into a bit of a mess, really, from his political perspective. So we can only trade what we see. Inflation numbers are going to be very key now. And we've got PCE, price index, out tonight, which is obviously the Fed's favoured inflation indicator. If that comes out stronger, we could really see the dollar take off in the next few sessions.
Well, in fact, if we go to the charts and we take a look at the Aussie across there, it took a bit of a tumble overnight.
Took a tumble. I think yesterday's CPI data helped that as well. It's still sticky, and I think we will get a hike from the RBA on the back of it, but certainly wasn't as high as we were expecting. So Aussie took a big tumble. It's come off those resistance levels just underneath 72, and we're back down just underneath 71 cents. We're still well bid relative to where we've been over the last couple of years, let's be honest. But we could see a bit of a change, especially if we do, and once again, geopolitics are going to be key. If the Strait of Hormuz is going to stay shut for longer than we expect, and it does keep dragging out, and we're hearing this from President Trump talking to oil executives yesterday, it will weigh on the Aussie. Even though we've got this high inflation, it's probably going to weigh on the Aussie as a currency more than it will certain other ones.
Yeah, interesting that push and pull. In fact, I caught up with CVA last week. They're forecasting it could fall to as low as mid-60s.
I don't disagree with that, and it will all come down to what we're seeing from the geopolitical side, because we will start to see hits on global growth, and that hits the Aussie hard. So, there could be further downside, but we know things change on a dime at the moment in the market. So we could be talking at 74 cents within a few weeks. It's crazy.
All right. As I mentioned, many central banks making decisions. The Bank of Japan earlier this week maintained that hawkish bias. How do we see the yen react?
Certainly did. We got a little bit of an uptick in the yen, and then once again now we're all the way back after last night's Fed decision. We're back up at monthly highs and annual highs. So the chart there just pointing out it's just peaked above it. I think it went above by about a pip earlier today. But if we start to see that break higher, which it could do in the coming sessions, fears of Bank of Japan intervention could come in again. So it could get very nasty in both in dollar yen and in yen crosses.
All right. Why don't we then take a look at what's ahead in terms of the Bank of England? What are the expectations of its policy moves? And what are we seeing with the pound as a result?
So we're on hold again. So it's a very similar problem for most of the central banks that are coming through this week is the uncertainty that we've got from surging energy prices against. For the UK, we've got slower growth. So you'd normally be hoping they'd be looking for cuts, but at the moment, if the inflationary pressures come through too high and inflation still is sticky in the UK, it's going to go on what they say. But from the chart perspective there, we're not too far off that, which is quite a good resistance trend line. If they do come in more hawkish as the Fed did, we might see a spike in the in cable and in sterling on the crosses. So probably should have thrown a few sterling crosses in there. You're probably going to get more bang for your buck on the hawkish side of things from the Bank of England and indeed from the ECB afterwards. If you go on the crosses, if you get a dovish side, it coincides with the hawkish Fed, then you could really start to see these majors motor, and that would be to the downside.
And across the channel, what are we seeing in the Eurozone in terms of the euro?
It's a very similar position, as I said. So it's going to be key on what we hear from Christine Lagarde in the press conference and what we get from the statement. If they stay relatively hawkish, which I expect them to do, we might see a spike in euro, but then it's going to be that battle against the euro and the dollar. It probably encourages euro on the crosses. As I said, once again, with the Bank of England and the ECB, if they're more dovish than expected, which I don't anticipate, it could take a hard hit, because that combination of interest rate differentials between the ECB, Bank of England and the Fed could really start to see things motor.
What's your favourite pair at the moment?
On the majors, I always love the Aussie, but I think bang for your buck, if that scenario comes out, cable's always going to move further than anyone. We could get 150, 200 points out of cable tonight.
Nick, terrific stuff. Thanks for talking us through the charts. Thanks for joining us on ATFX.
Thanks for having me.
And that is The Trade.